The stocks and crypto are both bouncing around. We need to take a look and see where they're possibly going. I am Dr. Stock, Doctor of Education, and if you've been watching my channels, you'll know that the other day I said that Santa Claus is suffering from chimney, and I said, will you have to use crutches? He said, no, but I have to walk with a candy cane. All right, a lot to cover in this video. I'm going to keep it as short and sweet as possible for you and as direct as I can. So SPY, QQQ, also Enphase, Tesla, Nvidia, ExxonMobil, Google, Carvana, and then Bitcoin, Ethereum, AVAX, and also an update on SHIB in this video. So jam-packed full of information. I'm going to keep the commentary clean and concise for you. And then later on in the video, I will tell you about my Patreon where you can see my buys and sells, and then also about my options course and about the free stocks from Moomoo. In the meantime, I want to get right into the charts on this one. So like I said, we're going to start with SPY. To see what we have going in the S&P 500 in the pre-market hours, we are down just a little bit, 473.80, and we closed yesterday at 474.84. So we're down just by a little over $1. As we look at the S&P, and you can see the overbought nature of the S&P that I've been talking about as per the RSI, and going out to the weekly, it's important to pay attention to the long-term trend that we have here. We're also tiptoeing into that overbought status there as well on a weekly basis, and you can see if we look historically, we can actually hang out there for a little while before we turn back around. That it doesn't necessarily mean, wow, look at that. It doesn't necessarily mean that we're going to immediately turn around, but it could be something that we would expect to see, especially as the end of the year draws close here, that we could actually see a little bit of a sell-off before that final, if we get it, Santa rally in next week's market. We're going to have to be watching for that. But with all this up, it's hard to take those long positions as of right now, especially because I do like to do options so much. Buying a lot of call options on SPY or QQQ at this level while we're hitting that overbought territory is almost like setting yourself up for failure. We don't know without any sort of specific catalyst that is going to send us that way. So I am watching this. I am cautiously optimistic, cautiously bullish about the markets themselves, but I do think that we need a bit of a sell-off at first before the next rally goes up. So we'll keep an eye out for that. QQQ, much the same thing. You'll notice I have a little tiny ascending wedge that we have here, and this is one that we could possibly fall out of. So on a technical basis, I said that we could possibly see that pullback coming in sometime soon, and the pre-market hours are down a little bit on this as well. So yesterday's close was 409.16, tracking the NASDAQ 100 that we have here, and we're currently at 408.04. So it's not a substantial amount down that we're looking at, and we've also seen reversals from pre-market to regular trading hours. So there's no guarantee here that this is going to stay like this, but if it does retrace a little bit on us and that we get that near-term pullback happening, that is something that's most definitely to be expected. What we want to watch for is we want to watch to see that we don't just come out of overbought and then cross immediately over the 50 and go bearish on this thing. We want to watch and see that we actually, what would be excellent, by the way, from an RSI standpoint, from a momentum standpoint, would be to bounce off that 50 and then go back in the bullish direction. So I would absolutely love for the markets to calm down just a little bit, get repositioned, refresh, and then really take advantage of that rip up again. This sideways period that we had back in here did not do so well for the options. So as a matter of fact, I even took a position that kind of relied on volatility at a time that we didn't really get that volatility. And that one ended up costing me, I think it cost me, I don't know, something like $600 or $700 to get into the position itself, as I went for a long strangle on this and didn't get the volatility we needed, and it cost me $40. So I lost just a little bit. Risk mostly mitigated in that one, but man, oh man, like any one of these times here or here, and I would have made significant cash off that, off a relatively safe play. And I would say that because I stood to make a couple hundred off that play, only lost 40, can't win them all. Let's move on to Enphase. Enphase has performed beautifully so far since the Fed came out and indicated those rate cuts. I don't think that that sends us to new highs for Enphase, being that that's up over $300 per share, but I do think that there's some strength left in this, and this is another spot. Look at what we got here. This is a weekly chart that we're looking at, and we just crossed into bullish territory, and I said last week on my channel that I believe that we're just starting the long-term bullish trend. We need to watch for that. So that was a good moment. And then this week, how are we doing so far? Well, this week alone, we are up almost another 10%. In the pre-market, rocking at 135, whereas the last close that we had was 135.32. So almost even. And this is one. Let's go down to the daily chart on this. So we go down to the daily chart. As we look at it, there we go. And let's also change this a little bit so we can see a little bit more of the behavior that's going on here. That is a lot of up for Enphase, considering that we on Wednesday touched all the way down to $95. Now we're up over 135. So that's a $40 change that we have there. So that's pretty darn close to 40% gain from bottom to top of that thing. And that 40% straight shot. Now, mind you, this is that rubber band effect that we're seeing. there at some point in time, and I'm not saying it's yet, we could possibly even see that 145 squeak out between now and whenever the market decides to retrace and then up again. It could even make that straight shot there, but I do think that 145 is in the cards. And as I mentioned in my video yesterday, 148 is just around the corner on that. Tesla's still messing around in there a little bit. We're still looking bullish on the weekly chart that we see here. And if we go down to the daily chart, there we go. You can see we're getting close to that overbought territory. 260 could happen. We could actually see a little bit more upward momentum taking place in Tesla before we decide to retrace and come back down. We're not at that same overbought place with Tesla as we were in the SPY and in the Qs. And on the daily basis for Enphase, we actually are in that overbought territory. So this is one that I would sooner expect a little bit of retracement, maybe back down to see if we find that 130 support, maybe even all the way down as far as 126 or so, maybe even 120. But I do think that there's more bullishness ahead for Enphase, regardless of how far we retrace. I'd say once you start to get down below 120, as a matter of fact, we can use the Fibonacci's to make a better commentary here. So let's say that we retraced from yesterday's close. That puts it down to 115, or even down here, down to like that 110, 111, 112 zone that we're looking at. Those retracements would all be perfectly fine and still be able to remain bullish and get that bounce. Should we retrace down below 110, then things start to get a little bit dicey for us, and that would be more of a bearish sign that we've gone too far down in that retracement. It just looks more like a drop that's not going to recover in the near term. So I just wanted to give that commentary out there. Nvidia, trying to make that cup and handle happen I was talking about, and I keep on drawing the cup part on this, and the handle, woo, that didn't work. Let's try again. Click. There we go. Click, and then there's the cup part of it, and then the handle should come off this way if that's what we get, and that's what I do expect. And that 480 level, so as a matter of fact, let me take this bottom trend line that we have here, and I'm going to move it up, and we'll show where that 480 is. I should say bottom support, not trend. There we go. So 480 is right about there. So should we come down with the handle to about that 480 level, and then this height that we have right here could be that increase that we get from wherever we break out of that, landing around somewhere around $530 per share. Should we get that for Nvidia? Now, mind you, I think the market strength would have to go with it. So let Nvidia retrace with the markets if that's what's going to happen. And if it does, I think we bounce off 480. And should the markets also recover, I think Nvidia is also going to recover with it. And if we get that bullish scenario for the markets, then I think that bullish scenario is also going to play out in Nvidia stock price as well. So that's what I'm watching it for, and I think that you should be watching it for that too. ExxonMobil, making an ascending triangle for us here, possibly even ascending wedge. We'll see. We do need to break over 104 for this one. And I did say getting up above this trend line before further bullishness. And we had a nice little pennant formation come out, popped out of that. Let's take a look on the daily chart to see what that looks like. When we look at the daily, there we go. When we look at the daily, we had a nice green candle here. Volume, not all that convincing, but that's okay. We have the 50 EMA and SMA right here, right around that 104 level that I was talking about. If we bounce off of that, we could possibly just fall back again off of that. So expect that resistance to be coming up for us. Should ExxonMobil move up that high right now in the pre-market, 103.42, and should we break up above it, that's a bullish sign, but then we still have to battle with the 200-day, which is at 106. Crossing the 200-day is a very, very bullish sign. That could lead us back from this death cross scenario that we reacted to prior to it coming along, that we could possibly see that continue to push on higher. So keep an eye on ExxonMobil. That could possibly happen, especially with what we see with the trade routes happening right now with geopolitical tensions. So just keep an eye on that one. Google, I mentioned this is one that I took a position on. This one in the pre-market is actually at 138.65, and yesterday's close was 138.10. Pre-market doesn't guarantee anything. I do think that it's possible to get that push to 140, and it'd be nice if we had the market support with it if the market retraces, especially when we look at QQQ, which tracks the NASDAQ 100, which is heavy on tech. Google being a tech, that is one that could possibly move in sympathy with it, or at least have its rise mitigated. So we do need to be on the lookout for that one. It's something that I'm watching very closely as I took a position in it. Let me see what I do. I think to check what I have. I think I have a 135 strike for January the 19th expiration on that one. Carvana is one that right now is at 58.90 in the pre-market, closed yesterday at 59.80. So we're about 90 cents down from where we were at yesterday, and I do think being significantly overbought as we are in this rising wedge that we have here, I think it's possible that we start to retrace down, and we'll have to see where we go with that. Let's go out from the daily. Let's go down to the 4-hour chart so you can see a little bit more detail. And right now, 56 is like that first little plateau I think we could drop down to if we do drop. and then down from there, I think down to like $54-ish. And we'll see if we continue to pull back from that point in time. But you can see even on the smaller time frame that we're in that overbought territory. Let's look at Carvana just on the weekly chart to see what it shows us there. And on the weekly chart for Carvana, we've actually popped out to overbought territory as well. So even though we're not totally seeing signs of reversal, I do think that sometime soon we could see a reverse on Carvana. So let me go back into this view that we're looking at right here so you can see the rising wedge better. We actually want to see ourselves falling out of that. Now, when you look at what I have, I think I drew this from the hourly chart. There we go. So that gives you a better view. And now it looks like it's more accurately drawn. So if this is the fall outside of that rising wedge, that would actually be one of the signals that we'd be looking for. And now, mind you, if you're looking on the hourly basis, and I apologize for bumping that there. If you're looking on the hourly basis, check out the RSI. Should we cross down below that 50, this thing could go bearish on an hourly basis. And I will be taking my profits as they come along, and I will be cutting my losses before they get too substantial. So right now, Google's in the green for me. Let's keep our fingers crossed that it stays there. I do anticipate that it most certainly could. Should the market bias be against it, that could mitigate our results, possibly even result in a loss. We got to keep an eye on the overall markets. Carvana is one that we also need to be watching for that. By the way, I have that TQQQ put out there, so should the markets retrace, that one should become more profitable for me, so we'll be watching that. By the way, if you guys want to see how I am playing this market, make sure you check out that link down in the description for the Patreon. I have my Tesla and Nvidia stock price prediction and earnings projections over there, which I'm going to update for this upcoming quarter for Q4's results from 2024. And then also my buys and sells go over to the Discord, and I have my options course. If you want to learn about options, I'm building that out right now. Starts with a complete beginner. I'm putting up those applications. I got the video recorded. Got to put it to take it to the editing room and put those up. Those will be joining this as very soon. And then also free stocks from Moomoo. If you want access to a wonderful trading platform, go ahead and check that out. You get free stocks by doing qualified deposits on that and 5.1% on your unused cash. Let's go back to the charts here. So let's look at Bitcoin to see what Bitcoin is up to, because Bitcoin right now is making a little tiny bullish pennant thing here. We want to watch the RSI. This is the hourly chart that we're looking at, by the way. We want to stay above 50 on the RSI to keep that momentum going. We have a peak at 43.5 that needs to be broken. If we get rejected there again, that could be a bearish thing for us. Now, mind you, down here at 40,000, about $500. So 40,000 or $40.5 thousand might be an easier way to say that, is where we have that bottom. It is possible that right now we're sort of getting stuck in a range-bound trade. We need to see where we break out of that range. So hopefully it's to the upside on this one. I do think that between now and January 5th that we could see that push higher from where it's at right now, but we need to see that resistance gets broken, and we need to see that support is not broken along the way. So that's what I have for Bitcoin. Ethereum's sort of making a W pattern here. I wouldn't be surprised to see Ethereum, should the RSI start to pop up this way, that our price action sends us above this top trend line and we get a breakout to the upside on Ethereum. So that's what I'm watching for right now for ETH. We got to make sure that we're holding that support, by the way, at about 21.5. I'm sorry, 21.50 when we look at Ethereum. AVAX broke the top trend line. Awesome. But I do want to give caution to those of you out there who are fans of AVAX. Check this out. And this is on the 4-hour chart that we're looking at this. We need to continue to push higher, because otherwise we have what's shaping up to be a head and shoulders pattern, and we have a neckline right at about $38. So should we fail to break that and push back down to $38, if that support fails, that confirms the head and shoulders pattern, and that's something that could send us back down to 34, possibly even below that. So be on the lookout for that. If you are bullish on AVAX, what you want to see is a break to, oh my goodness, there we go. You don't want to see me drawing straight marks on the chart here. There we go. What you want to see is a break up above this line right here, which is about $43 per AVAX. And so pushing up beyond that is going to be much better for us. We want to see that that gets broken, and maybe, and this would be the bullish case on this. There we go. There's a trend line off the tops, which we don't know that that's not an official trend line yet. We actually need a third point in order to make that happen, because you can draw a straight line off any 2 points. But should that happen, should we break up above this, you can treat this sort of as a place where you might go $45 to $47 per AVAX. Should we head up if this head and shoulders thing doesn't end up being a thing. Now remember, that doesn't get confirmed until we return to 38 and then break down through it. So we wouldn't be watching for that, because that confirmation is bearish. If we break up above the 43-ish line that I have here and continue upward, that's going to be a bullish sign for us. That means that we could possibly see up to the top of this, which is 45, and then up above that is like 47, 48 waiting for us, should this end up being a trend line. Like I said, it's not officially a trend line on the top yet. We need more points of confirmation in order to make that happen. So just something that I wanted to put out there, just some commentary for you. And then SHIB, when we look at SHIB, we possibly have And there's a lot going on here right now. There's a bit of a bullish channel happening right along here. You can sort of see this, and I have a bunch of different trend lines happening. Let me get rid of this one so you can see a little bit more clearly that we're currently trading. Let me click that and extend this. Perfect. There's that little bit of a channel that we have. We popped out above it, but we do need to watch for this. We don't want to break down below. Let me get rid of this trend line as well. We don't want to break down below this trend line because that's something that this little head and shoulders that we have here as well. Let me draw this one right here. This one is not symmetric. This one's asymmetric. Breaking down through this could send us down to the different supports that we have, and SHIB is highly volatile. What we do want to see is that we return back up to put in a new higher high here. If we fail to put in that new higher high and instead we come back down to this trend line, that could be a sign that possibly we might dip lower on that. So SHIB is one that I know a lot of people are following, a lot of people are excited about. I think I have, at one point in time, I bought like $100 worth just to hang on to for a while. And right now it's like 14 bucks or something like that. I never really put any substantial amount into SHIB. I think I have a couple million of it or something like that. In any case, right here's another shoulder that we could potentially look at. This is not a confirmed head and shoulders, but maybe we see the price do this. We need to watch out for that as well. So it's nothing that I'm actively following as far as SHIB goes, but I did want to provide some coverage on it. Just a little bit of commentary for what could possibly be on the horizon for SHIB. So that way, should you end up in a profitable case, you could consider, all right, so this is what I need to look out for. Should we put up a shoulder on this side and return back down to the neckline on this, which I would put that at about, let me see, 4 zeros and a 1. So should we get back down to 4 zeros and a 1, that could be a much further fall from there. And then should you hang on? Should you cut your losses? That's all for you to decide. But if we confirm that head and shoulders, that's something that, you might not want to hang on to unless you're a long-term holder for something like that. Not financial advice, just ideas that I'm putting out there, things for you to entertain so that you can protect your downside, but then you can also take profits wherever you feel necessary. So I better wrap this thing up, guys, because I got to get going here. But I did want to leave you with that information and let you know a few things that I'm doing within the markets. If you want to see more of what I'm doing, find that link down in the description for the Patreon. Come on over and join me in the community. I got a lot of new people joining, and everybody who has been there has been incredible. And the new people, I don't expect anything different. Come on over. We'd love to have you. It's a wonderful community. And then also down in the description is that link for Moomoo. Go ahead and sign up. Get your free stocks, get access to a wonderful trading platform. And as always, guys, I am Dr. Stock, Doctor of Education. Remember, my friends, that learning is earning, and we'll see you in the next video.